Hi guys, a very good morning to all of you and welcome to Opening Bell right here on Moneycontrol Live. I'm Stacy Pereira and I'm here to take you through all those news and cues that you need to be watching out for that could go ahead to impact your trading day. Of course, this is a truncated trading week. We just have 3 sessions. So what really should be your strategy? That's what we're going to be discussing. And of course, all the stocks that you need to be keeping out on your radar and the macro cues that are going to change or make and break this game. We are sitting comfortably at a 22,000 level, but where do we go from here is what we are going to be looking at. But before we get to all of those details and those levels that you need to be watching out for, let me take you through all the top headlines. Well, Wall Street rally really took a breather as stocks pulled back from those record levels on Monday. This after Boeing has gone on to say that it will be replacing its CEO and chairman by the end of 2024 as part of a broad management shakeup after the 737 MAX crisis really weighs on the aerospace giant. And stocks in Asia Pacific too have opened higher despite a weak handover from Wall Street, but the Korean Kospi has hit a 2-year high. The GIFT Nifty though is indicating a muted start for the Indian markets. And crude prices have surged. Brent crude rises over that $86 a barrel after Russia orders output cuts in order to meet OPEC's targets, while Ukrainian drones go on to strike, also disrupt the capacity that Russia has. Meanwhile, cryptocurrencies have also surged. Bitcoin retakes that $70,000 levels after last week's correction. And among stocks in focus today will be NBFCs like IIFL and JM Financials after RBI will be conducting audits on these NBFCs. There's also Adani Ports, which is getting into an M&A deal, whereas a couple of pharma names like that of Mankind Pharma that is likely to see a block deal in this trading session. All that could be on your radar. And globally, the United Nations Security Council has gone on to vote and demand an immediate ceasefire in Gaza for the first time since the start of the Israel-Hamas war. In a significant reversal in the policy, the United States has abstained and drops the threat to veto, allowing the resolution to pass in the Security Council. Well, that's going to have quite a bit of repercussions. That immediate ceasefire is what they've ordered. The resolution has gone on to be passed in the United Nations Security Council, and that, of course, has its bearings on how crude really has gone on to react. We're seeing some bit of volatility there, but of course, that one ticking higher, $86 a barrel is where we reach. But also, let me take you through a couple of F&O cues that you need to look out for. Now, there is this volatility that is expected also because this is the monthly F&O expiry that is scheduled for March 28th. So we are going to see some bit of truncated volumes as well. Even though the sessions are lesser, even the volumes will be lower. But in terms of what we're going to see, the data really indicating for the options that 21,900 to 21,800 is expected to be that support area for the Nifty, whereas the hurdles on the higher side could be if we manage to cross and get that 22,100 to 22,300 levels is what we're going to be looking out for in terms of the option cues, where your Nifty put call ratio is showing somewhere at 1.23 versus 1.20, some little bit of shift, but showing that there are more call really writings that are happening at this point. In terms of the F&O bands, what are the stocks that are there? Well, the NSE has gone on to retain Biocon, Sale, Tata Chemicals as well as Z Entertainment in that F&O band. So those will not be in the F&O to be trading in the futures and options segment, although in the cash segment they do remain, whereas it's gone on to remove Balrampur Chini Mills as well as Indus Towers and Piramal Enterprise. So those ones will be available to trade in the F&O segment. In terms of the fund flows of what we've been seeing, and we've been seeing some good activity when it comes to foreign institutional investors for the month of March. Although on that last trading session on Friday, we did see FIIs be the net sellers, where they sold shares worth 3,309.76 crore rupees, whereas on the flip side, you are seeing the DIIs really play back and bought in shares worth 3,764.87 crores worth of stocks on March 22nd. That pretty much being the setup. But let's get into what kind of a strategy one should really adopt And joining me to that is Brijesh Ail. He's the head of technicals and derivatives at IDBI Capital. Good morning, Brijesh, and thanks so much for speaking with us. I hope you had a joyful, holy celebrations, and we're back now. And in fact, we don't have too many days, just another 2 days of trading, and then we're going to go back into another holiday for Good Friday. So in this truncated ring, what are you really expecting the markets to do? We are going to see some bit of range-bound volatile action. It is also F&O expiry on March 28th. So what should one strategy really be, and what are the levels that you would suggest, at least for the Nifty and Bank Nifty at this point?
Yeah, good morning. So, so everything looks good as of now. The opening should be okay. Right now, it looks like 148 points kind of a pre-opening looks to be negative. But what we can say, look at the previous week close was the market bounce. It did break that 21,900 mark, and the closing was about 22,000. So that was quite a strong positive. So my sense is we'll be talking of the 50-day moving average, which is 21,950 mark. So that is a very crucial support. If those levels are broken, then there is a probability that we might see some good corrections in the market. Profit booking can be there. And this percentage term can be anywhere 4 to 5% kind of a correction below 21,950. We are cautious on the market. This is a truncated week. And as you pointed out, the PCR for the Nifty is 1.23. So whenever it comes to 1.23, the maximum it may go is 1.5. So PCR is in the overt. So there can be a mild pressure from the derivatives point of view. 21,900 is the immediate base. I would be happy that we don't see a close below 21,900. If we see those closes, then there is a probability we'll see some good amount of correction. On the higher side, 22,200 is the mark where again the call writers are actively active. So that is going to act as a resistance, at least for the next today, tomorrow's kind of a trading session. It's all depend on how today we see the close. Now looking at the pre-opening, 21,947 is what it looks like. We should not be breaking 21,900. If we need to be cautious if 21,900 is broken. It would be a more of a range-bound kind of a market. So let's see how it spans out.
Right, Brijesh, let me take your focus to a couple of stocks that will also be in focus and, get your view on them. I'm talking about NBFCs like IIFL as well as JM Financials. Now, this after we saw the action that RBI has taken on them. They've barred them from a couple of asset classes from trading in them. But now they've also gone on to say that they will be conducting these special audits, especially for 2 separate tenders for appointment for these auditors have already been put out, and the last date for the submission for these bids for these appointment of auditors is April 8th. So it's going to happen in the next, a few weeks or so, where we're going to see action against them. In terms of the stocks and how they have reacted to these news, we've seen huge sharp cuts after all of this news that came out in the past 2 weeks. So what really are we likely to see in the NBFC space as such? If you look at just these stocks, they've taken quite the hit since all of this action came into play. So how should one be looking at the financial space at this point?
I think there is a pressure. So definitely the way there has been a correction, major moving averages have been broken. For example, in JM Financials, the levels of 85 was a very crucial support levels, and now those levels are broken. Since we are fallen from the level of 110, 115, there can be a slightly trading bounce, maybe from some bounce back trade can be there. But I don't believe this would be a this would be a buying opportunity, because on the way up 80 to 85 is going to act as a resistance. So I think on a cautious note, if somebody wants to take an exit and then review it later, that would be the opportunity to take the exit route and stay cautious, because there is a high probability the recent low 73, 72 mark might get broken on the downside. So structurally, the weekly and monthly time frame are negatively placed. So I would take a call that on a bounce, I would exit and stay away. And whenever it comes close to 60, 55 level, maybe whenever we see some good demand, or maybe the buying volumes picking up, we might view at those points. But right now, I think one should avoid, and given an opportunity on one should exit on a long, on a
Right. So
bounce.
exit if there is a possibility is what Brijesh is saying when it comes to these two particular stocks in the NBFC space, but that one has been, after all of that action that has come from the regulators and otherwise. Another stock that would be on your radar, or rather should be, is Adani Ports. Now, we've seen the Adani group of stocks swing and pretty much push the markets in that whole rally. They've been quite the participants, one would say, but there's more M&A news that is coming this time around from Adani Ports, that is looking to acquire Gopalpur Ports, and this is almost a 95% stake, and it coming in at 1,349 crore rupees in cash. And remember, the enterprise value of this whole thing will be about 3,080 crore rupees. The transaction is likely to be completed by the first quarter of FY25, so which is why we're likely to see Adani Ports at the back of this. But let me get Brijesh's view on Adani group of stocks in Toto, and which he would like to see, if he has any picks within the group, what would they be and why, Brijesh?
Basically, in Adani, we only speak of Adani Port and Adani Enterprises. So specifically, Adani Port, the way in last Thursday and Friday, what the bounce we saw, it looks like it can be go back to 30 level. It's all-time the resistance zone from where the market corrected. The structure is positive. I believe it may cross those level also, but then from current from the expiry point of view, I think 1300 is the strike price where the call writers were active. What we observed on Friday session was this writers are exited their short position. So there is a high probability. I'm not pretty confident whether it will trade much higher, but then it looks like the 1300, 1320 can be the possible upside for the Adani Ports in the next 1 or 2 trading session, which can be viewed as a trading bet. So that's a positive view. The recent low, which is almost 1230, should be the stop loss for whatever we take the long positions.
Right. Well, let's also tell you, since we're talking about the Adani Group, another one of those stocks that will be in focus could be Ambuja. Now, this after Ambuja, which is the promoter of Sanghi Industries, and it plans to sell about 2% or close to 51 lakh 66,000 equity shares in the open market is what the news is. This is about 2% of their paid up equity in order to achieve that minimum public shareholding. With this, Ambuja shareholding in the company will come down to about 60.44 from the earlier 62.44 that it held in Sanghi Industries. And remember, this happened some time back, so even the cement stocks will be something that would be in focus. But here we are at market open in this truncated week, and on your screens they're managing to just about hold on to that 22,000 levels, but some bit of pressure, about 0.2% lower is what the Nifty 50 has opened, whereas if you look at the Sensex, that one down by about 200 odd points, we could say. So that one also seeing some pressure. Bank Nifty too is there in the red, but holding on to those 46,700 odd levels. So those could be those crucial support levels that it is taking, and we'll have to see how it moves from here, whether there are enough triggers for the markets to move in that upward trend, or whether there's further downside here. Broader indices also managing to show this mixed trends. The small cap one holding out, we could say, at this point, but we normally see that at the start of trade, that the broader markets do try to buck the trend in terms of what the benchmarks are doing. But overall, we did see, at least last week, the broader markets also managing to hold up and end in the positive. The Nifty IT index also there down and about. It was IT being the biggest drag, we could say, in last session, that after that Accenture news, but now pretty much flat, we would say, but still managing to get into some of those gains. Pharma would be another that will be in focus, and in fact we'll be talking about a couple of pharma stocks because there's lots of action happening in that space. So that one seeing some bit of negative pressure right now. Nifty Auto there in the positive, 0.3% higher. So auto is the counter that is seeing some positive. Metals too in focus, about almost 0.5% and more higher at opening bell, we could say. So that counter also in the positive. Nifty FMCG seeing some bit of pressure. Consumption names, of course, we have the US CPI data, the consumer index data that will be out later this week, as well as the GDP numbers. So that will be something that will also have its repercussions on how markets really go on to react to all of those macro cues. But let's look at what are actually the factors that are pushing up these indices and which are the stocks that are really making the difference at this point. Let's pull up a couple of the gainers and losers for you at this point on your screens. We are looking at names like HDFC, which was in the negative, whereas M&M in the positive. Adani Enterprise also there after that news in about that counter. Bajaj Auto, another auto name. So a couple of the auto stocks are there in the positive, which are among your top gainers in trade. IndusInd Bank is another one that is in the positive. So you have a couple of auto names, some financials also there. Bajaj Finserv there in the positive. So those are the ones that are really pushing up the indices higher. Britannia, Power Grid are your other names in the positive list, or at least among your the laggards rather is Britannia there. That FMCG counter, we did see that come under some bit of pressure. So you're seeing names like Britannia, Nestle there in the laggard list. Power Grid also another counter there in the negative. ONGC, interesting because we'll be talking about what OMCs and these oil upstream companies really have to offer and how brokerages are talking about them and what they have to say about them. HDFC Bank, now that one also coming in at that 1,433 level. So that is almost 0.6% lower for HDFC Bank. So let's discuss how all of these stocks and what we're really looking mainly from the benchmark indices. Well, we did expect that little bit of pressure. We did see Wall Street also put a pause to that rally and pretty much that handover really taking over here in the Indian equities as well. Let me bring back Brijesh. Brijesh, are these the levels that you were looking at, and what should be the strategy now that we know where we're looking at? What could be, a better strategy to be used? Are we looking at buy on dibs at this point as well, or, should one really just be waiting it out?
Yeah. So I think for the Nifty specific, I think it is holding to 22,000 level. So I think buy on dips can be followed for at least today's trading session. Closer to 20, maybe another 30-40 points of correction, 22,030 level with the precise level for the cash levels Nifty. So I would like to take the positive bet because I believe there can be some intraday bounce can be there because I can see good amount of buying in the auto space. Metals are slowly picking up, so I think that should be the flavor of the day. So slightly, it's kind of a sideways to positive bias. So maybe initially next another 10-15 minutes, market settles and then Nifty comes close to 22,030 odd levels. I think that can be one of the opportunity when we can take the long positions. So I think bias should be positive, specifically at least for the Nifty.
Right. Well, let's talk about a couple of, since we're seeing a lot of interest in auto names, there are a couple of brokerages that have also come out on auto specifically, and there's HSBC that has come out with a report saying that exports, even though that it's quite of a cautious note, one would say, because they say that exports have been weak for both Bajaj as well as TVS in the two-wheeler segment in the recent past, whereas there's a sharp recovery though in the two-wheeler export segment, which seems unlikely from here on. So even though they have been quite muted, they don't see any further upside or bigger export numbers, and that could be a reason for caution when it comes to these two-wheelers. However, the full benefit will likely only be visible by 2025 is what HSBC has gone on to say. They've given specific calls on these two counters as well, and we'll see how they're reacting. But TVS there on your screens, you're seeing some bit of positive momentum for that stock. Well, let's discuss on more sectors that should be in focus. We're almost at the end of the financial year as well. So what should be the strategy in the next financial year, and which will be those sectors that can really even take the markets higher at this point? We do have a lot of macro cues and, different the elections coming up, how those are going to react and how those will have their repercussions on the market is something that we need to be watching out for. And let's discuss all of that. And for that, joining me now is Kunal Shah. He's a senior research analyst at Carnelian Capital. Good morning, Kunal. Thanks so much for giving us your time and speaking with us. Hope you had a joyous and fun Holi yesterday, but we do have another holiday that is also coming up, and which is why our trading is going to be limited for the market action at least. But let's look at the broader perspective then and understand what should really be our strategy when it comes to, what the markets are doing. We are seeing a good momentum, but there are those dips of correction that is also coming in and different triggers for those. So what, according to you, would be those big triggers that could actually swing the markets in either directions, and why?
Hi, good morning, and thank you in the first place for having me. Wishing you and all the viewers happy Holi. Right. So, as you rightly pointed out, that election is something which will keep the markets in check. But otherwise, fundamentally, we are very well placed to kind of have further rally from here on, largely because the valuations still are in the comfort zone. There is no other economy other than India, which is going to have the growth rate that we are going to have, one of the best ROEs. There are few sectors which basically should rally from here on. Private banks is one of those which basically should do very good as the GDP kind of further picks up from here on. So basically, in my sense, that is one sector which should drive growth, drive rally from here on. Other than that, basically, as you rightly pointed out, there are few auto names which basically are doing good and should do further good. The likes of M&M, Tata Motors have been doing good and they should further do good. Autos kind of have seen good, but rural is something which we'll have to kind of see. Pharma on the US side has been seeing decent numbers. So that is the other sector which should kind of further rally from here on, because domestic side always used to do good with US contributing now to a lot of pharma names. We should see further rally in pharma names from here on. Real estate is other sector, though it has been an interest rate sensitive sector, but as interest rates start to cool down, right, that is the other sector which should kind of see further rally from here on. So, these are the few sectors in my sense which should lead rally from here on.
Right, you did mention private banks as well as pharma, and we'll be talking about both of them in detail. But let me just give some context to our viewer about the pharma, since that counters and most of those are going to be in a buzz in trade today. Now, one of them being Lupin. This after the company has plans, and it says it's going to carve out the its trade generics business in India, as there is a going concern. There's a slump in the sales basis to that, and they're going to pass that on to the subsidiary, that is Lupin Life Sciences. This in total will give them somewhere around 100 to 120 crore rupees. The company will then enter into a business transfer agreement with Lupin Life Sciences. This in the first quarter of FY25 is when they're expecting this transaction to be completed by June of 2024. Another one of those counters will be Dr. Reddy's Laboratories. This after the pharma majors enter into a license agreement with a US-based biopharmaceutical company called Pharmaz Inc. in order to commercialize a Centequin, which is Centequin India. This is developed by Pharmaz. It is a resuscitative agent, and it indicates for treatment in hypovolemic shocks, and that's why this counter is also going to be something that will be a buzz in trade. They're looking at pretty much this deal to suffice. And another one that will be a buzz, and there is buzz rather that we could hear any time of, is a block deal that is likely to happen in Mankind Pharma. And this where we're given to understand that Beige is the one that is going to look up to sell 2.9% stake in this in Mankind Pharma. This is likely to be in the block deals, is what we are getting to understand from our network channels. And of course, the offer price is in that range of 2,103 to 2,214 per share. And you can see on your screens, it is trading lower on the back of that news. This, of course, is the discount of about 0.5% according to the last closing price that we saw on Friday. So that's the counter coming bit under some pressure. And remember, Beige currently holds about 2.99% stake in Mankind Pharma, and they're looking to reduce that to almost, selling off or hiving off almost 2.9%. So that is going to be something, and that counter really on your screens, you're seeing that reaction come in there. But let me get back to Kunal and ask him about, specifically the financial space. Now, we have seen in the recent past, there have been quite a bit of one could say regulatory activity that has happened in the NBFC space, at least when it comes to the action taken by the RBI. When it comes to, you said you like private banking names among those, but we've not really seen HDFC really push up and participate. But do you still think there is room for one to enter into at least HDFC? Right now, there is news of a block trade pretty much in that counter as well, and which is why you're seeing that among the top laggards in trade. But what is your view on the financial space, and what would be the pecking order? Would you still prefer PSUs versus the private banks, or do you think the private banks are now going to be the players and they have enough mojo to go ahead?
So quickly on regulatory actions, it's always nice when regulator is proactive and that keeps a check on the overall industry. We see that starting from unsecured loans where risk weights were increased along with lending to NBFCs. Since unsecured loans were growing at a very rapid pace across the sector, then we saw regulatory action with Bajaj Finance, few cards basically being stopped, and then latest one with IFL and JM. So basically, in my sense, whenever regulator is proactive, it's always nice and keeps everyone under check. That's good for the industry and in the long term. So that's something very positive, which should be looked upon as positive in my sense. Second is basically within private banks, ICICI Bank believe continues to do good and should continue to do good. There have been senior management exits at SDFC, so in my sense, that still should be watched out how it will play on the business front. We also like select PSU banks because as the economy grows, credit growth will be there across sectors, and few PSU banks have got liability profile which is very strong, which is the need of the hour considering liquidity constraints that are there. So pecking order should be the ones which I discussed, and then there are few select mid-cap banks as well where there's a lot that is happening in terms of credit growth along with good liability profile. So that should be the pecking order, but there's still a lot of juice left in banks basically over next 2 to 3 years, right? And they are one of the biggest beneficiaries of the economic uptick that will happen.
Right. Let me bring back Brijesh quickly and get his view on autos and, which would be the components to be looking out for there. We did see a lot of action in Eicher Motors in the last whole week. Tata Motors, on the other hand, did see some bit of, swings on either directions. Or last week, we also saw Maruti that saw some good trading action and volumes there, touching those new highs for the stock. So what would be your pick, Brijesh, among the auto, and what should be the strategy? Should we be looking at ancillary? Should we be looking at two-wheelers, or what would be your picks?
As I noted out in the early morning that auto was something which was picking up the momentum. Specifically, this Eicher Motors, if you see on the daily chart, it has given a trend line breakout in today's session. So this breakout is very much valid, and I believe this 4200, which was the previous swing high, is likely to be retested. So somebody wants to take this trading opportunity, I think can play for this 200 points more in the Eicher Motor. Irrespective of this expiry, I think these levels may come during the next week, but pretty confident of that 200, 250 points kind of a move on the higher side. It's a volume breakout, so I believe this should work. And secondly, the Tata Motors is one of my favorite, and I believe whenever there is a correction, it's always an opportunity to take a long bets because recently, whatever after the corrections we saw in Tata Motors exactly met with support close to 50-day moving average. And now again, the stock is picking up the momentum and slowly bouncing back. It may take a little while, but that I believe 1050, 1060 should be the trading opportunity in the Tata Motors. One can look for take the call option trades for in the next expiry. So 1,000 plus can be the one of the call option bet in the Tata Motors specifically. I'm confident of 50-60 points trading bet in the Tata Motors. So these are the two particular stocks from the trade setup point of view. But rest of the sector, I believe, should be performing. In the last week, when the market corrected, auto was one segment which never corrected. So I think this follow through buying should be seen in the follow in this week as well.
Right, so we
So
can
I
see.
think an individual stock also will keep performing in the auto space, but then Tata Motors and Eicher Motors, we have a trade setup.
Right, so good setup for both of those counters, and you could see follow-up buying for both Eicher as well as Tata Motors. Let me quickly try and squeeze in a couple of queries that have come in on our live feed, and we request all of our viewers to continue sending us those queries. So quickly, Brijesh, there is Pon Rajesh who's asking your view on LIC and how should one be looking at that one after even that one has seen quite an interesting trade in these last few sessions. So how would you be reading LIC?
I'm pretty sorry, LIC being a sister concern, we can't speak on them, so I won't be able.
No, no, not a problem. We'll try and get that query answered from otherwise. But okay, then how about helping Gundela Hemant? He wants to know your view on Zomato, and that is also something quite interesting because we've been seeing these new age tech stocks really have their day, we would say, and we're getting into the earnings season in about a few weeks from now. So how should one be playing Zomato?
See, Zomato has moved out of that bad patch, and now the way it has crossed 140, 155, it looks quite pretty positive on charts. If somebody is having a position, I believe one should hold on to the position. Zomato will zoom up to 200 plus level. So the current momentum can be seen somewhere between 200, 210 level. And anytime when it comes back to 160, 150, re-entry or maybe a fresh longs can be initiated in Zomato. We are having a positive view. So on corrections, we can look for buy. Immediate target would be somewhere close to 200 and 210. That would be the zone on the higher side.
Quite interesting. So you can do see opportunities in Zomato, and hope that answers your query. Quickly, one more view on JSW Steel, and we'll be talking about metals in detail with Kunal. But Brijesh, what would be the charts really talking about JSW Steel?
It is consolidating in a range. The levels of 840 is a resistance zone, but then I believe metals after auto metals will be one space where we'll be seeing some amount of buying. Stocks like Tata Steel, SAIL, JSW Steel, Hindalco. These are the specific stocks which I am liking. JSW Steel, there is no trade setup, but it doesn't look weak on charts. I believe may not be during this expiry, but then post expiry there is a probability that once it trades above 840 mark, it will be back to 900 levels. So there is a slow and steady move, but the view is positive for the JSW Steel.
Right. So I hope that also answers that query on JSW Steel. Let me then go back to Kunal and get his view on metals as a sector. Now, we have been seeing some bit of interesting action there whenever there is some sort of action that comes in from China. And we recently saw they've also got into that, deflation mode. They are trying to prop up that economy. And there's always this China plus one. And when you talk about that strategy really working out for India, one looks at the metals and that whole pack really benefiting from that whole strategy if it does play out. Is that your view as well, and how should one be playing out metals as a play here in India if you do have one to consider those in your portfolio?
So far, we have been avoiding price-sensitive sectors, so we have avoided metals so far. But considering a lot of infrastructure activities happening in India per se, right, there is a lot of demand. But again, the prices are controlled a lot of by supply-demand that takes place globally as well, right? So we believe that there are a lot of structural opportunities available other than metals, right? So we have avoided so far.
Right. So avoid is from Carnelian Capital, not really looking at metals. But then what would be the other sectors that you would want to look for? We do have, getting into next week, we do have the RBI policy as well. We've seen what The Fed has done, a couple of other banks also, the Swiss National Bank also going ahead and cutting rates at this point. So one is really rising rates, in fact, for the Swiss National Bank it was. But there is that bit of caution as well. We already know Fed has said that 3 cuts are coming. But where really is that going to play out when it comes to the rate sensitives here in India? Are we likely to see some bit of change when it comes to those sectors? Is that your view as well? And what do you think RBI's next action would be?
I think as we discussed earlier, right, that regulator is very much proactive, right? So whatever is right is going to be done very proactively, and we have managed so far very well inflation as well, right? So I think probably we are a quarter away still considering the liquidity scenario which is there playing out right now, right? So probably that would be my take when it comes to rate sensitive sectors. But other than that, as we discussed, right, there's a lot happening on the other sectors as well. Manufacturing is one thing which is kind of seeing a lot of traction. A lot of sectors in capital goods space, a lot of sectors, niche sectors in manufacturing are also which are seeing a lot of traction. So all of that basically should continue to do good in the coming few years as well, right? So that's the take on sectors.
Right. Well, those are sectors, but what about, in a portfolio building exercise, we are seeing news of, something like a Bitcoin touching those new high levels each passing day. We're seeing gold also get to all-time high levels. So in a portfolio building activity, what would really be your strategy then? Should there be a rotation when it comes to from the mid and small cap towards the large caps again, because you're seeing those stress tests and others really put some bit of pressure on those? And what would be the other asset classes that you would like at this point?
So I think, yes, very much, at all points of time in markets, there'll be pockets where there'll be a little bit of frenzy right now, in terms of valuation. So valuation is something which is very important. There's no question about that. But as far as, building the overall portfolio goes, right, as I said that Indian economy is going to do good. Right, so placing bets structurally which are going to benefit as Indian economy does good is something which is going to kind of really safeguarding the ups and downs, because the domestic economy is very soft. As you pointed out, that gold is touching high. We have seen historically also whenever there are concerns at the macro level, gold is something which people plow back to, right? So that is one of the reasons why gold is kind of doing good, and there are gold companies which will be beneficiary of this, along with banks which are building on a lot of gold loan portfolios as well, right? So we have to be a little dynamic when it comes to building the portfolio, depending on what sectors are kind of going to do good, right, in that sense.
Right. So have that diversified portfolio in this kind of market should be a strategy that we hear pretty much from most of our guests. But at this point, we're completely out of time. So let me thank both my guests, Brijesh Ail as well as Kunal Shah, for joining us this morning, as giving us, your perspective onto different stocks, strategies, as well as sectors that we could be looking out for in trade. And to all our viewers who've tuned in, thanks so much. Do send us your feedback in our comment section below and keep writing to us. At least your queries is what we try to take up in this show. From me and the entire team that puts this together, thanks so much for tuning in.